Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Incorporated, a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
All right, Janine, let's kick things off with some exciting news from the Canada Mortgage and Housing Corporation. It looks like the annual pace of housing starts in April has risen by a remarkable 30% from March. That's quite a jump.
It sure is, Steve. The Canada Mortgage and Housing Corporation reported that the seasonally adjusted annual rate of housing starts for April was 278,606 units, which is up from 214,205 in March. That's a significant increase, and it's always heartening to see a boost in housing starts, as it usually indicates a positive trend in the market.
Indeed, Janine. Urban housing starts specifically climbed 28% to an annual rate of 259,788 units, compared to 202,668 in March. It's a strong indicator of urban development picking up pace, which is crucial for meeting housing demands in our growing cities.
That's right, Steve. And when we look at the actual urban housing starts in April, they totaled 21,720 units, which is up 17% from 18,539 a year earlier. It's promising to see this growth, especially as more families and individuals are looking to settle in urban areas.
Absolutely, Janine. And let's not forget about the rural areas. The annual pace of rural starts was estimated at 18,818 units. It's important to balance urban and rural development to ensure that housing needs are met across the board.
Yes, Steve. And the 6-month moving average of the overall seasonally adjusted annual rate of housing starts was 240,905 in April, up by 2.4%. This steady increase in the moving average suggests that the upward trend isn't just a one-time spike, but could be indicative of sustained growth.
That's a great point, Janine. Sustained growth in housing starts can have a ripple effect on the economy, contributing to job creation and supporting industries related to construction and home improvement. It's a positive sign for both the real estate market and the broader economic landscape.
Absolutely, Steve. It's encouraging to see these numbers, and it gives hope to prospective homeowners and investors looking to enter the market. With continued growth, we can expect more opportunities for people to find the homes that suit their needs.
Janine, it looks like we're seeing a shift in the Canadian spring housing market, with buyers gaining more leverage as the market stalls. The Canadian Real Estate Association reported a slight dip in national sales activity from March to April, and property prices are on the decline. This is an interesting development, especially for those looking to enter the market.
Absolutely, Steve. It's quite a change from the competitive market we've seen in recent years. Leah Zlatkin, a licensed mortgage broker, pointed out that this trend is particularly noticeable in Ontario's urban centers like Milton, Toronto, and Mississauga. Buyers are finding they have more bargaining power, which is a refreshing turn for them.
That's right, Janine. The number of properties listed for sale jumped to 183,000 in April, up 14.3% from the previous year. In the Greater Toronto Area, listings have surged 66% since April 2023, while sales have dropped by 26%. This imbalance is creating more competition among sellers, giving buyers the upper hand.
And it's not just the increase in listings, Steve. Properties are also staying on the market longer, with average listing durations up nearly 50%. This means buyers can take their time to make decisions without feeling the pressure to act quickly, which has been the norm for so long.
Exactly, Janine. With this kind of market shift, sellers are having to adapt quickly. Zlatkin mentioned that there's a trend of listings being removed and then reappearing at reduced prices. It's becoming crucial for sellers to meet the market where it is now, instead of holding out for prices from the peak of 2022.
Yes, and Zlatkin also cautioned against purchasing new properties before selling existing ones, given the risks of carrying multiple mortgages in a slow market. It's a reminder that strategic planning and financial readiness are more important than ever for both buyers and sellers.
And let's not forget about the CREA's Home Price Index, which declined 1.2% month over month in April, with the average sale price dropping 3.9% from the previous year. Although the market is still statistically balanced, there's a risk that current inventory levels could lead to more distressed sales if economic pressures increase.
That's a good point, Steve. This evolving environment requires both buyers and sellers to be more strategic and financially prepared. For buyers, it's an opportunity to find better deals, while sellers need to be realistic about pricing and market dynamics.
Janine, we've got some serious news coming out of Ontario's mortgage industry. The Financial Services Regulatory Authority of Ontario has issued a compliance order and a $15,000 administrative penalty against Razer Capital Corporation. They were found to have been administering mortgages without a license since 2014.
That's quite concerning, Steve. Operating without a license for such an extended period is a significant violation. It raises questions about how these activities went unnoticed for so long. It's a reminder of the importance of regulatory compliance in the mortgage industry.
Absolutely, Janine. The Financial Services Regulatory Authority discovered that Razer Capital's mortgage administrator license was surrendered back in 2014, yet they continued their operations. Under Ontario's Mortgage Brokerages, Lenders and Administrators Act, entities must be licensed to receive borrower payments and remit funds to lenders.
It's quite alarming, Steve. The fact that Razer Capital continued to engage in these activities without proper authorization suggests a deliberate disregard for the rules. This kind of behavior undermines the trust that borrowers and lenders place in mortgage administrators.
And it wasn't until a complaint was filed in April 2023 that these unlicensed activities came to light. During litigation, Razer Capital's president and sole director, Brian Pomer, even confirmed the company's role in administering mortgage payments through a sworn affidavit. They were receiving payments and transferring monthly interest to private lenders from January 2020 to October 2023.
It's surprising that Razer Capital didn't contest the findings or request a hearing before the Financial Services Tribunal. It seems they acknowledged the evidence was clear and chose not to dispute it. This situation highlights the need for vigilance in monitoring compliance within the industry.
Right, Janine. The Financial Services Regulatory Authority noted that Razer Capital and Brian Pomer were well aware of the regulatory requirements due to their past licensure. The intentional nature of their breach played a significant role in determining the penalty. They essentially evaded ongoing licensing suitability assessments and deprived clients of the protections provided under the Act.
It's a stark reminder of the consequences of non-compliance. While no remedial action was noted, it's clear that Razer Capital earned indirect compensation through administration fees linked to transactions with third-party lenders. This case serves as an example of why transparency and adherence to regulations are critical in maintaining the integrity of the mortgage industry.
Today's discussion revolves around an insightful piece by Robert McLister, highlighting the potential impact of federal debt on mortgage borrowers. It's interesting to see how federal debt, often perceived as a distant issue, might soon have a direct effect on homeowners.
It's a perspective that really hits home, Steve. Many people don't realize how interconnected government spending and mortgage rates can be. As McLister points out, increased government debt can lead to higher interest rates, which directly affects the cost of mortgages.
Exactly, Janine. As bond investors grow wary of rising government debt, they demand higher returns, which pushes up interest rates. Even a small increase in these rates can have a significant impact on mortgage costs, adding up to thousands of dollars over the life of a loan.
And that's a substantial burden for many families, Steve. McLister emphasizes that while Canada's debt situation isn't as severe as the United States, it's still something that requires careful management. It's crucial for our leaders to maintain fiscal discipline to prevent these costs from spiraling out of control.
Absolutely, Janine. It's a wake-up call for policymakers. As McLister notes, the U.S. debt situation is particularly precarious, with potential global repercussions. If the U.S. were to default, it could trigger a financial tsunami affecting Canadian markets as well, including our mortgage rates.
That's a daunting thought, Steve. Ian Pollock from CIBC Capital Markets suggests that in such a scenario, Canada might initially benefit from a flight to safety as investors seek out more stable markets. However, the long-term implications could still lead to increased rates as the U.S. stabilizes.
Indeed, Janine. The interconnectedness of our economies means that what happens south of the border can quickly impact us here. It's a reminder of the importance of maintaining our own fiscal health and not becoming complacent about debt levels.
It's a call for prudence, Steve. McLister's article suggests that fiscal restraint and efficiency are vital to prevent future crises. By focusing on balanced budgets and sustainable spending, we can mitigate the risks that come with high debt levels.
Exactly, Janine. While we can't control everything, we can advocate for responsible fiscal management to ensure that mortgage rates remain stable and affordable for Canadians. It's about safeguarding our economic future and making sure home ownership remains attainable.
Steve, it seems like there's a new rule change coming for those buying new homes in Ontario, and it's something that buyers need to be aware of. Starting July 1st, home buyers will be encouraged to register their purchases with Tarion, the new home warranty provider, within 45 days. This change is set to become mandatory in 2026.
That's right, Janine. This move is designed to help keep track of new home purchases and ensure compliance with provincial regulations. If buyers don't register in time, they could find themselves with less protection for their deposits if something goes wrong with the project.
It's a proactive step, Steve. Peter Balasubramanian, the CEO of Tarion, mentioned that this rule helps them track what's happening in the market and also identify if builders are operating legally. It seems like a good way to protect consumers from potential fraud.
Absolutely, Janine. Under this new system, if buyers fail to register, they'll be placed in a pool with other non-registrants, which is capped at $10 million annually. The amount of deposit insurance they receive will depend on the number of people in that pool.
I understand the need for regulation, but there are concerns about the fairness of this system. Independent consumer advocate Barbara Captoon has called the registration requirement confusing and unfair. She argues that it shouldn't be the buyers who are penalized, but rather the builders who might engage in fraudulent activities.
I see her point, Janine. The system does put some responsibility on the buyer to ensure they're registered. However, Balasubramanian has noted that they are also increasing penalties on illegal building activities and investing more in investigating such cases.
That's good to hear, Steve. It's crucial to hold those bad actors accountable. Plus, with the largest consumer protection payout last year of around $80 million due to receiverships and illegal builders, it's evident that these measures are necessary.
Exactly, Janine. The experience from last year highlighted the vulnerabilities within the system. While the registration process might seem cumbersome, it's intended to safeguard buyers and ensure they get maximum coverage for their deposits.
It certainly is a balancing act, Steve. Homebuyers need to be vigilant and make sure they understand these new requirements. Registering their purchase within the allotted time frame can provide peace of mind and better protection.
Right, Janine. As always, it's about being informed and prepared. With these new rules, buyers have an opportunity to secure their investments better. It's a step towards a more transparent and secure real estate market in Ontario. Now, let's take a look at the current mortgage rate landscape. This week, RateHub.ca has provided us with the latest insights into the lowest fixed and variable mortgage rates available. It's crucial for our listeners to stay on top of these rates, especially with the recent economic developments.
Absolutely, Steve. With the federal jobs report indicating a rise in unemployment to 6.9%, largely due to layoffs in the auto industry, there's a lot of uncertainty. Michael Davenport, a senior economist at Oxford Economics, mentioned that we're possibly heading into a recession, which might push the unemployment rate even higher.
That's a significant concern, Janine. The prospect of a recession could lead the Bank of Canada to consider further rate cuts to stimulate the economy. However, the ongoing trade tensions and tariffs present a complex scenario, as they could also drive inflation up, limiting how much rates can be cut.
It's a delicate balance, Steve. The upcoming Consumer Price Index statistics, due on May 20th, will provide more clarity on whether a rate cut is warranted. These numbers will be crucial in determining the Bank of Canada's next steps in June.
Right, Janine. Meanwhile, ratehub.ca has highlighted the lowest available mortgage rates as of May 15th. These rates are essential for anyone looking to secure a mortgage in this volatile market. It's all about finding the best deal to fit your financial situation.
And for those navigating the mortgage market, it's important to understand both fixed and variable rates. Fixed rates offer stability, while variable rates fluctuate with market conditions. Given the current economic uncertainties, it's wise to weigh the pros and cons of each option carefully.
Exactly, Janine. For our listeners, staying informed about these rates can make a significant difference in managing mortgage costs effectively. It's about making strategic decisions that align with both current market trends and personal financial goals.
Definitely, Steve. With the potential for economic shifts on the horizon, being proactive and informed is key. Let's hope that the upcoming reports provide some positive news for the market and give clarity to those in the process of buying or refinancing a home.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.